So you can't see my microphone. I've got it down just below the camera because I'm fancy.
I
Rodney
haven't.
wants people to know.
Yeah, no, I don't. It feels weird to have it in front of me, but I have no other choice today.
Or any of the other days that we've done it.
So I have that same stand you have. We both got them on the same at the same time, right? Like inverted table stand. Is that what you have,
Uh,
or is yours on?
I've got a big arm.
Oh, that's what I
Well,
have.
here I'll like I've got a whole thing
Hmm.
that you know that's it. That's the first and last time you'll see it.
All right. I've got too many monitors in my way for that, I think.
I swear to God, you should not only do I so there are literally we talked about monitor size last time, Kev, because I
Yeah.
know that's like super exciting stuff. So I have like a super wide monitor, and then I from this is the same desk and like stuff that I've been using since I was a trader at Cargill. So I have like two other monitors which I don't use anymore, but they're still hooked up. Like one's vertical, one's horizontal, and then there's a TV that I used to have, CNBC on all day,
Yeah.
which I similarly like it's not running. Um, so my problem is my home office. So my house was built in the 20s. And so this was a room, it's called a breeze through room. So it's connected. So our bedroom's right next to it. And the idea was in the summer you'd sleep in here and throw open all the windows. And so the
Yeah.
breeze would go through.
Got it.
But because the house is old and whatever, like it's at like a tilt like this. Uh, so I'm using a lot of core strength to keep myself from rolling backwards all the time. And there's like a super sloppy setup that you can't see that keeps the microphone from pumping into my face.
Nice.
Uh, so
That's
we should
class.
we should introduce Kevin.
Yes, we should. But first, before we do that, sorry, Kevin, one more monitor talk. I finally ordered.
Hashtag monitor dog with Rodney and Gabe.
I
Send us all your
finally,
monitor questions. I'm on a 240 refresh here.
yeah,
We like to go 320 sometimes if we're playing a
yeah.
little Call of Duty, but we'll settle with 240 for our Excel spreadsheets. Sorry, go
You'll be
ahead, Rodney.
disappointed in the quality of the monitor that I have, but I am going to turn it on a 90-degree angle. So I had to order a mount for that. That's going to change my life. Just I'll let everybody know in a couple weeks how that did change my life, but
Yeah.
Amazon will have it here, I think, this afternoon. So, without further ado, Kevin Bauer, good to see you, man. Thanks for joining us.
Yeah, thanks for having me, man. It was great to reconnect with you guys a month or so ago, and yeah, look forward to today's discussion and hanging out with you guys. I've watched the episodes and like what you guys are doing, so it's awesome.
So, Rodney, how long have we known Kevin?
So I met Kevin. I was thinking about this. I met Kevin in 2005, and I had just taken a job in Morris, Illinois, working for Cargill. And Kevin, you were there before I was there, right?
Yeah, just slightly before you
Yeah.
were there. That's correct. 2005 is absolutely correct.
Yeah, so my first memory of Kevin is I heard a lot about him. I knew he was like this guy that seemed cool. I think I talked to him on the phone, and I remember him being like kind of a Chicago guy, more of a Chicago guy than I was used to at the time.
Little South
Yeah.
Side out of KB. Yeah, yeah.
And then when I was trying to think of Kevin, you rolled into the Cargill building in like an old Buick or something. It was an awesome, gigantic car. What was that? Do you remember?
It was called White Lightning. Yeah.
Oh yeah, you remember.
Yeah. It was a four-door Buick. Yeah, of course. And
Yeah,
yeah, I'd cruise around for Cargill in that vehicle.
yeah,
You know,
yeah. The
it's,
good old
it's
days.
yeah, good
Yeah,
old
so
days.
Kevin, so I met Kevin in 2005 and have been learning from him ever since. Every time I chance to get a chance to talk to him. So, what about you, Gabe? You meet him right about that time too?
Well, I mean, it must have been right. So we're on around the 20-year mark, Kevin,
Yeah, that's right.
Yeah,
on and off over there.
that is about right. I started at Cargill right in 2005. That is correct.
So
You guys have it down. So yeah, it was a good group in Hennepin, Illinois, and then we got to spend a lot of time with Gabe, so that was always fun.
And
you,
was that your first grain job, Kevin? Like, were you a commodities guy before that?
Yeah, so if you recall, I was born and raised in Chicago, the north side, Gabe, not the south side.
oh, I,
That's a very important distinction.
there, so
So
Sorry, keep going. Where in the north side did you grow up, Kev?
I grew up 4 miles west of Wrigley Field
Okay, that's funny.
and met.
I talk about so I lived in Chicago for 10 years till I was 12, and we lived at Keeler and Irving.
Yeah, right. Practically neighbors, Gabe.
Yeah.
Hmm.
So met my wife in Chicago, and she was from a small town called Princeton, Illinois. So we moved out this way 26 years ago on a 2-year plan. So you know, moved from a town moved from a town of 3 million to 7,500, and then that was too big for us, so we moved to a town called Tiscowa, Illinois, which is I don't know, 400 or 500 people. So
Beautiful this time of year.
it's perfect. So yeah, Rodney started at the Mercantile Exchange and worked on and off the trading floor for the first 15 years of the commodity experience. So yeah.
Yeah, that's super cool. So 2005, for anybody that doesn't remember, was the year Katrina hit the and me and Kevin were both buying for the river at the time. And I assume you were only buying for the river, right? Back then it was
Well, we had some flex delivery starting back at that time, but mainly for the river, yes.
yeah. Man, if I remember right, that flex delivery started because of Hurricane Katrina. Like there wasn't much of yeah before that. So I remember I was super early in my career and corn on the futures market was trading about $2 and fall basis was like $1.20 under. I remember that. So I was literally quoting farmer 80 cents for corn. I was getting screamed at by every farmer all day long. And then finally one farmer calls in and he's like, "What's the market doing?" I've been screamed at all day, and I'm like, we're down 3, it's 80 cents or whatever. And the guy clapped and cheered on the phone. And I was like,
LDP was he using?
"Please tell me why you're happy about this. LDP, baby." And he taught me about LDP, and it was like, oh man, this is actually a super fun industry.
Yeah, that lasted about the first couple of years of our career there, and then it was
Yeah.
never to be talked about again, really.
Yeah, and I don't think anybody'd be excited about an LDP payment today. That'd
Well,
be a bad.
look, it's always good to put one over on the government, man. Love that LDP.
Well, the worst part, I don't know how we could go back to it because of the lack of fax machines. That's a core
That's
component
a great
of the
key
duty.
part of that workflow.
Yeah, that's
Oh,
right.
LDP. Yeah, I learned about LDP in 2003 because
Yeah.
you that's when I first started at at the risk management part of the business, and I was like, why are these guys not selling when we're at 220 and it looks like it's going lower? And they're like, they're rooting for LDP, and I was like, what? Well, like, let's all be clear, none of that ever made any logical sense.
Yeah,
It was
right.
entirely uh well, it's like there's a book about the happiest and least happy countries on earth, and I think the least happiest country is Moldova. And
Okay.
so I'm not going to tell the joke, right? But there's like or it's not even, I don't know if it's a joke or a saying or whatever. They talk about like in Moldova, if everybody's stuck in a pot in hell and it's boiling over and somebody's about to get out, as opposed to cheering them on, all the Moldovians pull them back in, kind of thing.
Okay.
That's what rooting for LDP payments feels like to me.
Yeah. I mean, I bet if we really talked about it, you would tell me some smart thing about why it feels better to like essentially lock in a price on a dip. Like that feels more like a lottery ticket, right? It feels more like fun and games than on the like cash component of it.
Man, I mean, I don't know. So here's the challenge. I didn't know anything that I know about the behavioral side of things back
Yeah.
then. And so I wasn't looking for any of that stuff, right? It was just I honestly think it was like commiseration. It's like it was I'm in pain because the market's so low. I want other people to feel pain.
Hmm.
I really think that's what it was. And and to be fair, right? Like when we think about like Cargill's it's it's the Goliath, right? But the bigger Goliath is the government.
Yeah.
Always has been, always will be. And so it feels like you're getting away with something anytime the government's writing you a check, right? Like, or maybe not anytime, but it can feel that way, especially in those moments when the prices are really low. I mean, also, it was a totally different market, right? If you managed to sell close to $3 in the early 2000s, you were like high-fiving everybody and their grandmas. You know what I mean?
Yeah. Right.
And it was just kind of, you knew sooner or later you were probably going to see sub 220. You'd hear the stories about beans in the teens. That was always because that happened, earlier. But corn really hadn't had those moments yet.
Yeah, the 250 specials, right, Kevin? Remember the 250 specials?
Yeah, I remember when I was working for a company, an old trader told me that he went on vacation one summer, and he came back, and everyone was like, "Bill, man, you missed a great week of trading. We moved like 2 cents last week." and now, it just doesn't make any sense how quickly we can move at times. The dynamics of the market have definitely changed over time, and I remember, pricing some structured products at 190 with a double up at 210 or something like that, which just seems crazy, doesn't it?
So crazy.
So Kevin, we should hit on what are you doing these days?
Yeah.
So I work with a company called Amius. They're a London-based company offering OTC products. We also offer brokerage and hedging opportunities and foreign exchange risk management.
Are they teaching you to do that with a British accent, or you get to stay with your standard Illinois?
I get to stay with my Chicago accent, according to according to you guys, which I don't see. But yeah, it's going really well. So we offer a lot of different risk management tools along to anybody along the value chain. Whether it's consumers or producers, which the consumer side's kind of new to me, but anybody who has risk out in the market, we help them find solutions. So we have office. I work out of the Chicago office, which Jeremy Barron kicked off just in late 23. So maybe year and a half ago, and we're building our presence in the U.S. now. We have office in Miami, obviously in London is our home base, and then we have a representative office in Singapore, and then we have folks throughout the U.S., but we also have sales force in Central America and South America. So trading softs, grains, oil seeds, energies, oil, a lot of different markets. So it's been great. I'm not sure if you're familiar with our founder, Adrian Brickell. So he started the company in 1998 as a joint venture with Armagero, and then in 2013 restructured it as Amius, and off we go. So we're growing. There's a good team of people. We have over 200 trading relationships, 110 employees, and it's going really well. I'm really like it. So.
And you work directly with farmers, or do you work through like grain companies with farmers?
Yeah, so we have the opportunity to work with large producers. We have the opportunity to work with co-ops, elevators, really anybody who has risk in the market, Rodney, which is a unique thing, even on the consumer side, trying to hedge their price risk if the market moves higher. So just really anybody who has risk in the marketplace, which is wild because just able to work with even someone who has forex, currency exposure. How can we help manage that risk using OTCs to help manage that risk? So it's exciting for sure. A lot to learn and learning a lot, but man, our background with what we learned at Cargill gave me a good base to really understand, the whole spectrum of the business.
Cool. So, I mean, in a lot of ways, this isn't new for you. Like you said, you did a lot of that at Cargill, and you've been doing it on and off since then, right?
Yes. Yeah, absolutely. Yeah, I've been working with in the OTC markets, since I started at Cargill is when I first, really got a taste of it and how it works. And And then, through your option school and other things, really learned, the black box of it all, of how it works. And I think what's unique for people like Rodney and I, and what you taught us in part, is when to use these different tools, how to manage the risk and set the expectations for not only growers, but even, elevators, co-ops, that are managing their risk.
Yeah, man, I looking back on the things that Kevin's taught me, the thing I remember about Kevin was every day had an opportunity, right? Until I met Kevin, I didn't realize that every day had an opportunity. It was like, all right, I want to sell or I don't want to sell, whatever. And Kevin was always really good at, like, I would say, properly positioning the right products for the person that needed some risk management today, whether it's on the long side or the short side or whatever. Yeah, that's a skill, man. That's a real skill.
Well, Rodney, you know this as well, right? I mean, if it doesn't make sense to you, you wouldn't sell it. I know that for a fact. There were some products that you know maybe Cargill created that really weren't advantageous to the grower or anybody involved, and it didn't take off because the feedback was it wasn't a good fit for the grower. And I remember us having conversations about that, saying, well, if it's not a good fit, what is a good fit for the grower? And just in today's environment, is it the right time to do something? Well, maybe not. What's the market telling us to do, and how can we execute something that can be beneficial for everyone?
It's funny, thinking about so when he, you know, talking about like there's always an opportunity and that kind of thing. When we taught option school, one of the leading questions we give people is like, hey, if the market was up yesterday, what's it going to do today? Right. And invariably the response is it's going to go down. Right. And vice versa. And so one time I actually sat down and at the time pulled all the historical price data we had for like December corn futures. So like 25, 30 years of futures prices. And I went and basically looked at what was the statistical probability of the market being up or down, right? Like of going the opposite direction the next day. And it's literally 50%. Like it doesn't matter how long it's been going up or down, it's 50%. And at the very end, and I don't remember how many days in a row at one point, like it had gone one direction, but it was like we had 2 or 4 pieces of data and it was an even split on whatever, 10 days in a row or something. Like it was crazy. Um, but to that end, I think it's the perspective that there's always, well, I mean, you say there's always opportunities, right? So from, I think, but Kevin, you also talked about how you're trying to figure out for a given individual, right, or business, it may not be that there's an opportunity for that business today.
Correct. Yeah, right.
But when you're looking across like a scope of dozens or 100 people in the market, I mean, almost everybody in that whole set, somebody's going to have something they should probably be doing today. Um, and so, yeah, I agree. Like that's one of the fun things about talking to Kevin is it seemed to come natural to you, Kevin, like figuring out where the opportunity was.
Well, we had good training, and really it's just looking at things a little different. So thank you for that. But yeah, it's yeah, I mean, things are tough, and you just don't want to do something to do it, right? I think there's going to be opportunities sometime in this year, but it sure doesn't. From a farmer's perspective, you have had very limited opportunity to make sales, and the opportunities were early before there's any seed in the ground, which makes it tougher to execute a sale before anything's in the ground, or you can physically, as you like to taught us, touch it, feel it, smell it, all those good things about psychology of the market. So the opportunities were early; they weren't fantastic, but there was a little bit of opportunity, and now I think everyone's just wait and see mode.
So I we'll stay away from trying to imagine what the future brings, but I do want to talk. So Rodney and I were talking a couple weeks ago about volatility, as we like to do. And part of the reason that we said, oh man, we got to get Kevin on, and especially like literally right now, was thinking about the seasonality of volatility. And so, what does that look like, and how do you think about that? But also, more specifically, this idea that thinking about getting the paid for risk that you're taking, right? Or changing what risk you're willing to take given some of those things. And so when we talk about, I'll give a little more context. So just as a reminder to everybody, people talk about volatility a lot, and I think it's, and more often than not, it's not well understood.
Yeah. Hey, I'll jump in here. I've thought a lot about our conversation the last 2 weeks and had a couple phone calls from people, and I am confused by volatility as well, for sure. Like anything I say should not be trusted. It's
Uh,
hard. It's difficult.
it's hard because it gets used to talk about a lot of different things. And I think what's important is when we talk about it from a markets perspective, and specifically, risk management tool perspective, whether that's futures themselves or options or more complex structures, volatility really means a specific thing, and that's to use layman's terms, like that's the amount that the market's expected to go up or down between now and some future date. And what's important is it's not directional. So it's market movement, not high volatility is not correlated, or certainly not strongly correlated, to high market prices, nor is low volatility. So for example, historically, and Kevin, smack me around if this trend has changed, but running into, so let's talk about corn, right? It's easy enough, really well understood, super liquid market, ton of information. Historically, running in from planting to pollination, we tend to see volatility creep up. So when we say that, we're saying the market is pricing in an expectation that there will be a lot of volatility. Now, that doesn't mean that it will be up or down. It just means that it's not really sure about what's going to happen, but something big will happen. And most of the time that's true, because either we see like a really comfortable pollination period and the weather's friendly, and we start to see big moves down as we take risk off the table because the market isn't worried about whether or not there's going to be a crop. Or we might see that price shoot up. And even if we're seeing the price shoot up because there were issues around production, or expected issues around crop production, it's a known thing. Now, we may not see volatility come off as hard in those cases because it's unclear how bad the production issues might be, but we'd still expect volatility to come off. Is that still kind of a seasonality that you're seeing in there, Kev? I haven't looked at the deck corn market and all. Well,
yeah, so I kind of explain volatility at like the speed the market will move one way or the other. And, right now volatility is low. I think it's trading roughly 15%.
15%,
which is historically bad for realized volatility. And implied volatility in the fronts is about 21%.
Okay.
Probably because we have the USDA report on Thursday, so it's holding together a little better. So that market is indicative of what we're seeing in corn. We're seeing a 22-cent range in the last couple of weeks, and it hasn't been really super big moves. There's been a day or two in there that have been big moves, but really it's been grinding higher and then gets slapped lower. The funds are selling, and it's just so yeah. The seasonality is we should see volatility. We should have seen volatility pick up with uncertainty with the crop going in the ground, and it peaks out typically soon. And we just didn't get that bump in volatility this year so far. There was some minor bumps in volatility when we had the minor rally back in May, but that's very untypical. That it's not typical that we didn't see a more seasonal move in volatility.
Now, you used a 3-syllable word there, ahead of volatility, which was realized volatility. What does that mean?
Just based off the underlying is what I was talking about, instead of based off the option movement.
So what we've seen happen in the underlying market,
right?
Already? Okay.
Yes.
Okay. So you're saying it's been it's been trading at a 15% or it's been moving at a 15% volatility.
Yeah.
But with the uncertainty looking ahead a little bit anyway into July,
Which I think,
go ahead.
which I think based off historicals is probably like 5, 6, 7 points off his, where we normally would be. But I don't have that data in front of me. You would probably know better than I do off the top of your head.
That sounds right to me. Like I said, I haven't looked at the number. I always like I know as the reality is that genetics continue to mature, right? We see that vol. We've always seen those vols come off, slowly, but it's a very slow downward trend because the crop is more reliable, right? It takes a bigger and bigger punch to knock it out anymore. But climate change is always helpful for that one in terms of adding some unknowns in.
And I know we're talking corn, but the volatility in beans is worse. And I was talking to some people today that the bean volatility has been the lowest since COVID.
Where's the bean vol at?
It's like roughly same thing, roughly 15%, and like 14%, I think, implied roughly.
Well, and so bean genetics have come a long way. Rodney and I were talking about that a number of weeks ago, but they're still weaker than corn, and so that's another reason we would expect more volatility in there. It's also, I think, a little bit more subject to like a hail out or something, right? It's a little bit more delicate of a crop. So I was looking at some of the emergence numbers in Iowa, Nebraska, Illinois. Bet Rodney didn't even know I knew how to look those up anymore. And it was funny. They were through I think it's through early June, and everybody was kind of off of trends, like some a little bit above, some a little bit below. But then by the time you got to early June, everything was right where it was supposed to be historically, except for Illinois, who I think is behind a touch.
Yeah.
Um,
Yeah, that makes sense. Hey, before we go too far, I want to like really nail down these volatility numbers. So you threw a few different versions of volatility out there for us, Kevin. Also, I assume I'm going to have tons of questions. Is December volatility different than March volatility in any given day? I assume yes, right? Like you
Yeah.
said.
Yeah, and I would think, Gabe, you could probably say because of time, there's more time. So, volatility will be lower right now in the nearby, since there's really not, I guess the market doesn't think there's much uncertainty now, I guess, versus what it could be down in the road. Is that correct, Gabe?
Yeah. So if the December corn future implied volatility is 21%, just to tie a ribbon around that, that means that the market believes that the underlying futures will move a certain amount between now and towards the end of November.
And I could find that number looking at an at the money put or call option, right?
You can look it up on bar chart.
Yeah, right.
Bar chart, go hit the at the money go hit the options, and it'll tell you it says IV maybe instead of implied vol. But that's that number. Maybe next time we'll go through the rent calculation that tells you exactly what that converts into from a futures market move. But so if the December volatility is 21%, right? So again, that's expecting a certain amount of market movement between now and December. So if we think about what's going to happen between now and then, we've got some production reports and ultimately harvest. But certainly by the end of November, we should know how much crop was produced. And so if we think about like it's that number is considering everything happening. So a couple peaks of all, right? A little bit of weather thrown in, but overall, especially the closer you get to harvest, and certainly post the couple weeks post when we're mostly cut on the corn side, like pretty quiet from a market movement perspective. And so then if we think about March futures, the options there expire mid-Feb. So there's even less going on between end of November and towards the end of Feb. And so it includes that volatile period that we're still or expected to be volatile period that's coming up. But once the crop's done and in the bin, there's not a lot that happens, at least specific to the corn crop, between November and March. So we would generally expect that March volatility at this point in the year. Again, I'm reaching back, man, but it's probably like a 2 to 3% discount to whatever the DC is.
So this is so interesting. So I'm gonna throw out some numbers. I have the live screen in front
Okay.
of me. Okay, so these 25 implied volatility 22%.
Okay.
An at the money call option trading about 25 and a quarter cents tonight. All right. Then if you go out to March, implied volatility at 19.7%, which matches up exactly, I think, with what you're saying. And then the at the money call options were 29 cents, which is a function of time. That extra 4 cents and probably even a little more is time value, right?
Yeah. Yeah.
Yeah.
So you're still paying, right? And it's still not that the market's not going to move at all. As we all know, there are plenty of things that can drive changes in the underlying price, right? There's Fed policy movements. It's a dollar denominated commodity. So things that increase or decrease the value of the dollar can have a massive impact relative, to wherever that crop's going. Energy prices, another big mover on the
Yeah, there's
outside.
also I think it's the January report every year is the final production numbers
It's the
for.
final production. Most years it's a sleeper. I don't think the
Yeah.
market prices a lot of all in, but I think there's been some exceptions, but they're few and far between anymore. I don't know if there's been some recent scares, but yeah, generally Jan's a sleeper. Is that
Yeah.
Kevin? The folks that you're talking about or talking to, today, what kind of conversations are they looking to have? Like, what are they worried about? What's on their mind?
That the farmers undersold. That's the big one. There hasn't been big opportunities. We're down. I think we settled today about 440. We've tested 434 and a quarter, hit it and bounced off it. Rodney and I were talking about it earlier today when we bounced off it for the fourth time. We're just, getting up to a certain level, it's being sold, and we're just not getting any traction. So we're worried about profitability on the farm, being, at 440 futures level right now. So that's the big driver would be, how can we be profitable this year? How can we help, from an elevator standpoint, how can we help our growers be profitable at this time of year? And what kind of strategies should we be implementing to help our growers?
And then what about on that commercial side, right? Whether it's the elevators or some of the other, processors, are you having any conversations there? Or are they content to kind of see how things play out at this point, given where markets are?
I think they're pretty content to, I think it's too early to throw in the towel for a lot of people, but that's just, what I'm picking up from people. That's not my opinion. My opinion is, we're at where we are because the market's comfortable. We'll get some new data on Thursday that may make the market uncomfortable or be just as comfortable as it is today. From an elevator perspective, carries are pretty big. Typically, I think we're trading 15 cents out to D's March and like 30, close to 30 cents on D's July, which is, probably has room to improve maybe. So, that they're looking at the spreads and how they can manage their risk as well.
Rodney, how does that carry look like at current interest rates?
I mean, you start talking 30 cents, you're good. There is definitely enough of a carry in the market to justify rolling stuff out and carrying it for sure. And like, in my neck of the woods, fall basis is pretty wide right now. Guys are pretty, content to kind of hang out, thinking we probably have a big crop coming our way. So that makes that carry even bigger, from some discounted October price.
Is there much talk about cattle out there? It seems like we're hitting higher and higher cattle prices. I think I've talked about my buddy in Nebraska, who's talked about that a couple times. Like it's at prices where it's bringing people into the market, into the cattle market, who have not been in it historically, and so he was talking about it, being concerned about how people are making decisions. It's like jumping in on the thing after it's already made most of its money, but it could be wrong. I'm just curious if that comes up in any discussions people are having.
No, I just been keeping up with the cattle market for the fact that, it's top of news, and how expensive things are. So from what I understand, it's a supply issue in cattle, and prices are really elevated, and I see cattle folks really locking in good margins. So that's really all I've heard on that.
Yeah, same. I've got a couple guys I work with that have cattle, and they just say, "Yep, cattle's good right now." I don't know anybody making any major moves because of it.
Yeah. All right. Well, I think that's good to hear. I think.
Yeah.
Nobody here raises cattle, on account of the fact that like most people here barely have a yard. But although you don't have to go that far, I don't know if I talked about this, but you don't have to go that far west here to start getting out to where there's actual farms and stuff.
Yeah.
It's about 20 minutes. I think everybody, in the same way that people often think about Illinois as just being Chicago, I think people think about Massachusetts as just Boston. But it at an exponential rate, the density drops.
Yeah.
So also, we've had rain every Saturday for the last 10 Saturdays, and we're very much looking at an 11th.
Really?
That's
Yikes.
that's my weather report for Boston.
Tough way to start the summer.
Yeah, absolutely.
Gabe, I have a question for you, Gabe. So in your experience, all your years of experience, this low volatility, is there anything that you can remember that changes that from a low vol to a high vol besides maybe a flash drought? What are some things that can change in the marketplace?
Yeah. So there's obviously the fundamental stuff around. You could see if for some reason there were big changes in export numbers. I mean, I think what isn't helping is I think the second crop in Brazil was really strong this year too.
Yep.
Yes.
The safrina crop, and if I'm saying that right, I always forget how to pronounce
I think
it.
so.
And so, I mean, it's unlikely, but that would be something if there was some sort of major, Katrina-like incident that messed up shipping out of Brazil. Just generally speaking, I think we haven't seen big changes yet as a result of the tariffs in terms of the supply chain being still largely in North America geared north-south, but not in a good way. But if we start to see some changes there, that would probably add volatility, but drive prices down. Really, other than that, I think energy is probably the most likely. If we saw something that drove energy prices higher, right? If there was some sort of concern there, I don't. There's obviously any number of geopolitical hotspots that still exist, but those I think are kind of known quantities and priced into the market. So we would take some big changes there. Monetary policy would be the last.
Yeah.
So yeah, normally corn does a pretty good job of keeping the vol in up until we're past pollination, and being similarly through July, August. So it is an unusually depressed volatility period. I think I opened some of this discussion up talking about getting paid for risk. What are so I know calls that all three of us have taken have been, how do I fix this contract? Right? Like
more likely today is, how do I get the price that I want to get? I haven't even started.
Kevin said there was an opportunity 3 months ago. Can I have that one? What's that price?
Yeah.
Right. So we've all gotten those calls where like, so in today's market, what would you say, 440? We're
440. Yes.
Maybe somebody's hoping for 475. There might be some things that get there. Like I could go sell a call option on the exchange. You said, Rodney, the at the money's 25 right now.
Yep, exactly. Yep.
So as we like to do, I should make clear, I'm not giving any trading advice. This is just an example. So somebody might think, oh, I'm going to go sell a call, the at the money call. So I'd sell the 440 call. I'm going to get paid 25 cents for that. So I can stick that on top of my grain contract, on top of the futures price that I'm getting paid right now. And I'd do some mental accounting. So I got paid 465 for that. Great. But now I'm not going to sell any better than 440 on the future side for whatever I did on that futures. And so there's a little, I think people certainly need to be careful of what they're doing to bump those prices up. Is there anything you guys have seen out there that might be ways to be, I don't know, give yourself the ability to be patient, but not let things drift lower? Is there anything that you guys are looking at that makes sense from a risk perspective?
Kevin, I'm gonna defer to you on this one. Well, like another way to say that is what's trading today? What are guys attracted to, right now, if anything?
Yeah, I think I just think that from a grower standpoint, maybe they should be looking at, selling some premium if this is, just a thought, not a trade recommendation. But if we do, get some type of rally and we do get a spike in volatility, where it makes the risk a little, juice worth the squeeze, so to say. So, right now, I think, most growers will say, there's not a lot of opportunity because of where the price is and because of where, the options are trading that would enhance anything. So I don't have a good answer for you today. But if guys were really concerned about downside risks significantly, they could buy puts. They're very cheap, and see what next week and June, the report at the end of June brings. There's going to be some market movers. Just don't know which way it's going to move. Right? That's always the greatness of the USDA.
Yeah. So, this is where I think it's interesting. I've always combined volatility and price together in my mind, right? And Gabe, you taught me not to do that, and I'm sure we're going to drift back there again today. But, where I get concerned is, $5, like 480 was kind of the mark for everybody. It seemed like like a month ago, right? Hey, we get to 480, we're going to sell some corn. It was an old high, I think, that we were trying to take out. And we didn't get there. And, we had opportunities at 460. And I remember talking to farmers like, hey, it's not great, but it's like, I don't know, it felt like maybe a time to take some risk off the table. And it was met with no chance. I'm not locking in a loss or something close to a loss this time of year, which totally makes sense. But then what ends up happening, in my experience, is the price goes down low, and that's when the farmer is suddenly like, oh, hey, what about these premium offers or short call options or accumulators? And it's like lower price, lower essentially strike price, double up option. It's usually it's like the other way around in my experience is when a guy's like, man, I do not need a premium on my grain. Perfect. That's the perfect time to do an accumulator and lock in $6,
Right.
or
Get
something
yourself
like that.
yeah.
Yeah. But I would say that's more of a price thing than a volatility thing, right?
That's right. Well, so you guys brought up Katrina, right? And I remember for some reason I was out in the field so it wasn't even like $1.20 under. It was like there was no basis. Like people couldn't buy.
Yeah, it could be. Sure.
But that was a great example, I think, where while the price was dropping, I think volatility was shooting up because nobody knew what the hell was happening, right? Like when things were going to get fixed or anything else. So that vol was creeping up. We've also seen when I used to teach option school, we pulled an example of where volatility went up. I think it was like 5% or something, and the market price was unchanged on the day. So market because we pulled up the historical price that day, like it wasn't that interesting, but the vol had settled up like 5%, and I think it was literally just somehow uncertainty was injected into the market, but there was no reason to change. But the market price itself, like there was no price input change. It was just like, hey, we're not confident about this. I don't know if it was an issue with a number or something, but it was probably an 07, 08 thing. I would guess. Um, and so it certainly, when we think about like what causes uncertainty, it it tends to be production issues, right? Like that's, nobody goes, oh my god, there's too much corn. No, rarely does anybody panic about the amount of crop being produced.
Right.
What's interesting is you see it the other way around in cattle. Not to drag it back that way, but the panic in cattle is actually similar to equities, where having too much is a big problem, because it's got a much shorter time frame to it and can cause really big logistical challenges if suddenly you've got beef and it's not moving.
Hmm.
So equities are a great example. When people don't know what's going on, that tends to drive down confidence in an equity, right? And so if people are worried about Microsoft, nobody goes, oh, I don't know what's happening at Microsoft, let me go buy more of it. Right? Like the stock goes down. So there tend to be some of those loose correlations, but again, like it's a dangerous trap to think. I do like what you said though, is the day that you don't need a premium for that sale to look good, that's a great time to do it.
Yeah, exactly.
So
So is the opposite true? What Kevin kind of alluded to, again, not trading advice, but it feels like buying puts right now because they're cheap. Like all I'm thinking is like, I don't know, for whatever I can buy to protect myself to the downside rather than sell may make sense.
it's so it certainly makes sense. I will say, so I've never been a farmer. I've never had personal commodity exposure. I absolutely use that strategy on equities. If I think there's something, if the market, we've obviously seen times when markets head lower. If it feels like vol's coming off, but I'm worried about that market continuing lower, I will absolutely buy out of money puts. I love an out of money put, you know, as kind of a pseudo insurance play.
Yeah.
And so I think the challenge is paying an option premium when you're already at what feels like a contract that's underwater is really difficult.
Yeah.
And so if I was having that conversation with somebody, like, 440 is probably a painful price to sell at from a futures perspective. And so, okay, but I would guess for most guys, it's not like the end of the world, right? It's frustrating. It's borderline angering, probably. But there's probably a level lower than that that's like a real problem. Now you've got the crop insurance piece coming in, which is super helpful. But I would probably want to have a conversation of like, when do real problems start for you? Like when we take a step back and look at all this. Because basis is probably going to come off too if we're seeing that futures price continue to drop lower. Right. That's the other mystery piece there that the crop insurance won't help you out with.
Yeah.
And so the conversation probably right now is that's constructive around this idea of buying a put below the market is like, let's have a real conversation about like, where do problems really start for you? Let's try to think about what did basis do when the crops looked this good and all that kind of stuff. And maybe look at a put level that helps boost things up, right? If we're starting to head that way, because it's probably not that pricey with vols at 20% or 22% or whatever it is.
Yeah, and I would say, Gabe, the other conversation you'd have is, what's your crop looking like, and what do you base what yield did you base your break even off of, right? Is it going to be, and it's still too early to say, hey, this is going to be in the bin, but those are things in the next month and a half, 2 months, you're going to start having a better handle on, and what does it look like if you incrementally start making sales at levels that you're not super excited about. You'll be happy. You'll be happy if it goes lower, and then you should have a lot more to sell if it goes higher. Those are the conversations that we've talked about. Quite often is, how do you manage that risk? And just because you make a sale today doesn't mean you can't do something down the road to take advantage of the current, the future market conditions.
Yeah, that's right. Sale is not a sale forever. So
That's right.
Yeah, hey, that's a good point, Kevin. I was pressing some guys today on that yield number. 440 is not good. Actually, I just did some quick math. 85% of 470, which is the crop insurance guarantee, is 399.
Okay.
So like that's probably around the biggest pain point is 399 futures. But I was pressing some guys today saying, hey, look, I'm not excited about selling 440 corn or whatever. I guess I'm trying to lower expectations for some guys. And one of the ways I was trying to do that was say like, hey, you told me you had 240 bushel corn out there. Planning went pretty good. Is it possible it's 245, right? Like, should we be bumping that a little bit? Super hard to do this time of year. But definitely, I think the right discussion because if you lower that kind of break even price, it might be a little easier to get off a center, right?
Yeah. And I think growers are probably, maybe undersold, some elevator contacts or, people in the industry, think that number's, 5 to 10% sold, for a lot of people. A lot of people it's probably more, but, so a sale at 440, another sale at 480, another sale at, whatever it is, in the big picture, hopefully it looks okay with good yields.
Yeah.
Well, I'm glad we fixed that problem.
Hey, Kevin, I'd like your thoughts on a couple things. So when we're talking about volatility and options. So 20 years ago now, I hate to say it, 15, 20 years ago now, premium offers were that was the contract. If you knew how to do one OTC thing, it should be a premium offer, which is essentially there's some legal thing that I can't say here if I work for somebody, but selling an overhead call, right? And attaching that premium to a grain contract.
Sure.
And what I've seen here lately is the industry has trended. I haven't heard anybody talk about a traditional premium offer in 10 years. It seems like everything's shifted to the accumulator contract or contracts like that. Do you know why that is or what's happening there?
Personally, I think it's just a different way to manage it, or the way they manage it. So maybe they changed the name or did something different. But the one thing, Rodney, that I always loved, and I told this story last week to somebody about when you do a accumulator or a selling an overhead call is managing that risk and that expectation, right? And so I remember being with you, and you'd have a sheet, and the overhead call might be $5, and you would draw a line up to $6 and draw a smiley face and say, Mr. Grower, if corn's at $6, are you going to be happy with that $5 sale? And nobody in my mind could ever say Rodney never talked to me about it, because who is out there drawing smiley faces at $5 level?
Like two grown men too, right? It's like
Yeah,
a
yeah,
35-year-old guy and a
yeah.
60-year-old guy in the room. I'm drawing emojis on a piece of paper.
So I think maybe the reason maybe the industry has gotten away from that is maybe a lack of understanding of how they work. Maybe maybe a easier sell would be to sell the accumulator, something like that. Just whatever it may be, instead of really trying to educate the grower and say, hey, there's maybe a time and place for some of these contracts for your operation, depending on your risk appetite. But I think it's probably just ease of use.
I I think also, accumulators are pretty broad term, and I think there's a lot of different versions of it out there. Um, what Cargill offered originally was something that when the market went down, anything that wasn't accumulated went away. Right, you had no more pricing solution. I think there's a lot out there now where they do a better job of making sure that stuff's still priced. Um, like if you're in the OTC sales business, you liked the accumulator because what happened was you basically you'd accumulate. You'd either have a successful or I shouldn't say successful guy. You'd have a contract that run the course, never knocked out, and just priced per the rules. If stuff knocked out, the market was lower, and you could put those bushels back on a new accumulator, right? And basically do it again.
And what you did looked good, right? It felt different.
You got a little bit better back.
Yeah.
Yeah.
Right.
But I like the versions that I've seen more recently where even when they knock out, you got a floor price on there somewhere. And that doesn't mean, I'm sure everybody's different in terms of how they do it. You can still add other stuff to it or whatever. But I so it's not like the old school straight up knockout stuff.
Yeah.
Which also those are actually really incredibly difficult to hedge from as a trader.
The knockout.
So it's called in the money knockout, basically. So without going into what all the pieces of an accumulator, because it's a fairly complex structure behind the scenes. Like it can be anywhere from 4 to 6 or 7 instruments like come together to make it up. But the crux of it is, you're pricing at some level up here above the market, and when the market goes lower, you still get the price up there every day, as long as it doesn't hit some other, what we call the barrier or the knockout level. And the problem is it behaves like a normal option, and then as you get closer and closer to where that barrier level is, again, as an option trader, its behavior gets real squirrely because it's this thing that could suddenly disappear. And so the model doesn't quite know what to do with itself. So, we're not going to, there's no way we're going to run an episode on hedging flipping barrier options. But you can email Rodney with all your path dependent option questions.
Hey, I will say, anybody who's listening on the smiley face thing. So I had a guy I'll never forget. Hopefully I didn't tell it on this podcast yet, but a guy called me up one day, or I probably called him, telling him that his accumulator or premium offer had doubled and gotten picked up and it was in the money, right? And he was mad and he scoffed. He was like, "Oh God, you talked me into that." And I was like, "Hey man, I know for a fact I asked you if you'd be happy if this happened." And he put his head down. I'll never forget. And he's like, "God, you drew that smiley face on the piece of paper." He remembered it, and it really got me out of a jam, I think, there. So yeah, it's a good habit. Kurt Klecker taught me that, I think, and came from a book, Everybody's Talking. If you haven't read it yet, Everybody's Talking. It's a really good book.
Chrissy Crum who was another ex-Cargill person, used to do a good job of getting very explicit and deliberate about making sure folks knew exactly what they were signing up for.
Yeah. Just today, I was talking to a guy about putting some accumulator offers out there. We've got some offers in for $5 futures, which feel 10 miles away right now. It felt good when we put them in. And we were talking about lowering them. And it was like, "Hey, where's that target? We set it at 470. And I literally was just like, "Sure. And you better be just as excited about doubling at 470 as you were at 5, if you're going to do it."
So did he drop to 470?
Not yet. We might. I do think, we've talked before. As time passes, confidence goes down, right? Or up, I guess, if things are going your way. But I do think, people are holding out probably a little more than they should have for these big chunks, right? I'm going to sell 15%, 20% if we get to these certain price levels. And I think now we're back to, "Hey man, let me get 5% off at this price and 5% off at this next price." And I think that's the right way to do it, honestly.
Yeah, just all you got to do is be on the right side. You got to be on the side with the funds, man. It's easy.
Yeah.
Yeah. So then, so given how painful current prices are relative to break evens, are you guys talking about 26 crop at all?
I am not. God, there is a carry there though. I haven't paid enough attention to it. There's 30 cents carry, so these 26 trading at 470. It's just hard.
That's maybe something you could look at because probably zero is sold out there or very little is sold out there. Maybe to write an overhead call or something like that to, when the time is right on this year's crop, maybe something like that. That's
for Rodney smiley face at 5.
Yeah, something like that. $5 starting point for some 26 crop. You could probably do a lot worse than that. So
And you think a guy would attach that premium to like 25 crop?
yeah, something like that. If they like going across crops, which some people do, some people don't.
Yeah.
What can you get? What can you get for like that call, Rodney? You got your quotes up?
Yeah, $5 D's 26 trading at 26.5%.
What's the option premium?
Um, five. Oh, I'm sorry. What's that? $5 strike, 26 and a
Hey,
half.
Rodney, if I sell a $5 call, what are you gonna pay me?
I think I just said
No,
26.
you said 26.5%.
Oh, I'm sorry. 26.5 cents. I was looking at the
Rodney has transitioned into the matrix where he only sees volatilities now.
Maybe on a slight rally that gets up to 30, 35, maybe something like that. I don't know.
Right. Yeah.
Once again, not a trade recommendation, just some thoughts.
That's right. Yeah. Yeah, we really should add something to the front of this podcast that says no trade recommendations happening.
Well, we haven't given any.
Yeah.
So I don't. Anyway. Let's see. What other you got any other questions on the list there, Rodney?
That's all I had. What?
Anything you want to talk about, Kevin?
Yeah.
I think you guys are doing a great job. I was a little nervous coming on here. Today. I called Rodney. I said, "Are we going to have an agenda or anything?" He goes, "No, we're just going to talk." I'm like,
Agenda.
"All right." So yeah,
Ronnie, I ain't
no,
got time for an agenda.
no.
Oh man, I got to see there. So I have a friend that works at a glass house, greenhouse.
Okay.
They grow lettuce, and so they have a couple of different facilities. This one happens to be in Massachusetts, and so I went out there. This is the second time I went out there, but I forgot. It's like I'm living in Blade Runner when I go in there. So it's this thing. It's like 5 acres, right, under glass, like all automated, and it's like just lettuce coming off lines, coming down, shooting down, and it's almost continuous, almost.
Really?
Just it's crazy, and like you go stand up in the middle of it, and you're looking out over thousands of lettuce plants just very slowly moving along. It like I felt like I was in the future.
Is it hydroponic or dirt?
It it it's dirt. I mean, it's like peat and wood chips or something.
Yeah.
And they're in these really long trays, a bunch of seeds, but
Gabe,
it's
Rodney was a lettuce farmer.
Yeah.
you were a
I
lettuce
had a
farmer.
hydroponic lettuce set up in my basement for years.
What'd you do? Grow about 6 heads a year, or
It was like I could grow 12 at a time. It was this really small system, and I grew romaine lettuce, which really came in handy during what they had the E. coli problems in Mexico there. I don't know what year that would have been. I was still at FS Grain. I remember my boss, he was a big farmer, and we would go to lunch and get the salad bar at Jewel and then bring it back. And I remember we showed up one day, and he always gave me crap about hydroponic farming. He thought it was the stupidest thing in the world. And whatever, for me it was a terrible investment. But we should show up to Jewel one day, and there's no lettuce. And he's like, "What's going on?" And somebody says, "Well, there's an E. coli outbreak down in Mexico." And I'm like, "That's what you guys get for growing your crops just out in the open air. What you want to do is
idiots
get into a bait." Yeah, I mean, I could have supported a third of a family
for about 3 weeks? Yeah. If you come out to Boston, we'll go out there. It really does feel like the year is 2150 or something. And
is it air conditioned or is it hot?
I mean, it's climate controlled.
Yeah.
Right. So where they're growing, it's hot. Where they're packing, it's cold. And
yeah.
But it's an incredible setup. It's absolutely unbelievable. And this is like their V1. Like they have another facility out in Pennsylvania that they said, is even faster, and bigger. Yeah. Anyway, so that was fun. It's a completely different style of farming.
Yeah. Have you been to the one in Rochelle, Kevin? The tomato, there's a big tomato operation up there, right?
I have not.
Yeah. Really similar.
On the
Big,
glass.
I think they said 5-acre greenhouse, yeah, that they raise tomatoes in.
Yeah. It's funny. It's also just funny the idea that like, yeah, we're gonna be freaking amazing at growing lettuce. Get out of the way.
Yeah.
like, but
Dude, lettuce is,
it's awesome.
iceberg lettuce is not 99 cents at the grocery store anymore. There's probably a little margin in it, I would think.
Hey man, they did give me two boxes of lettuce I brought home. So
Really nice. I don't know if it should be or not, but apparently if you leave the roots attached to the lettuce and put it in the package, it's worth like 5 times more than if you cut it off. We see that at our grocery
really,
store.
is that it's like a vine on a tomato?
Exactly. Yeah, they like pull it out of the peat and leave the roots and everything.
I'll let my buddy know.
Yeah.
I wonder how much waste that would cut out.
Oh God, yeah, I would think it'd be.
You could charge more per pound and and have more product.
Yeah, you could probably eat the roots too if you put enough French dressing on them. Oh
Well,
yeah.
I think I know what
Probably
you're
the
talking
best
about,
part.
but it's like the whole head, right? That they stick in there, right?
Yeah,
Yeah,
right.
yeah. This isn't, yeah, yeah. So they cut the bottoms off all of it. So it's just B team, I guess. Forget I said anything. I don't even know.
Right. Are your kids out of school yet, Gabe in Boston?
No, we got this week, and then I think like one day next week, maybe two.
Don't you guys fly like "Don't tread on me" flags out there, and then you got your kids going to school until middle of June? That's crazy.
I was thinking about this, you son of a bitch. So like I was thinking about like Massachusetts, and I was thinking about like how poorly understood we are.
Oh yeah.
Like people look at Boston and Massachusetts, like these guys are so liberal and whatever. Like what it is we believe very strongly you're entitled to your own stupid opinions.
Yeah.
Right? And we'll work really, really hard to let you do whatever idiotic stuff you want to do as long as you're not messing with anybody else.
Yeah.
But that doesn't mean like
Yeah.
and so it's interesting because I think people conflate the two, right? Like they don't see there's a lot of I remember like trust is a big thing here. Like I don't know if it's left over from mobsters or what, but it's like
Sure.
but it's like such a huge thing, and it's got nothing to do with politics or anything else, right? It's like it all comes down to like, one, are you trustworthy? Okay, good, and then we're done talking, right? Like I'm like one way or another, either like you're in the good, you're in that bucket or you're not, and then yeah, you think whatever the hell you want. I don't give a go
Yeah.
do don't tread on me. But like we are like so hardcore moderate. It's hilarious. But I guess
Yeah, that story checks out, man. When I took that job at Indigo, I was sure I was walking into, the most liberal place in the world. And it reminded me, yeah, probably in a lot of ways more conservative than Chicago, right?
there are ways, absolutely.
Yeah.
Absolutely. And you'll find pockets, like anywhere, right? Like of different views. But that's the whole thing, is it's like, yeah. So don't confuse with letting somebody or supporting people be able to do what they want to do with actually thinking that that's a great idea.
Yeah.
It's like, don't tread on me.
Yeah.
Yeah, I think you're thinking of New Hampshire, which is live free or die. That's those guys.
Yeah. Somebody's got the "Don't tread on me"
Don't tread on
flag.
me is like, isn't that like, it's somewhere in the southeast. I think it's like West
Is it?
Virginia or something.
We'll look at it. We'll do a fact-finding mission for
A
the
little
next.
bit further south.
Yeah. Kevin, any closing wisdom for anybody? Call it farmers, grain originators, soon consumers. God, none of that would come out.
No, I just think know your risk and know your customer, just just as always. And when the opportunity strikes here, if there's an opportunity, take advantage of it. But I guess worst thing, making no decision sometimes can be a lot worse than making a decision. So just kind of have a game plan moving forward on what your risk appetite is and how you want to attack these markets moving forward. Yeah, it's just man, it's just been painful watching these markets, and that's people just get complacent, like it's never going to move. Someday it will move, and we got to think about what the next move is going to be.
Yeah.
And draw smiley faces. How about you?
For me, I think it's smaller chunks ramping into those prices that you want to sell, cost averaging, never feels good on the way up, but I have yet to have a time that I didn't think that worked out well after it was all said and done. Worst case scenario, even in those worst case scenarios, as you're legging in these 25, say we see some rally, we're legging in, every price is a little higher than before. And the fear is you run out of bullets, right? Well, I haven't seen that many years where we ran out of bullets. 2012 had been one.
Yeah.
That's about it, right? And then even then, I love to go back to 2012 because that was actually the year where, guys ended up making more money than they've ever made. But if they were able to put the blinders on and sell some 650 corn for D's 13, they made way more money than they made in 2012.
Right.
So
remember the good old days when we killed the crop 2 or 3 times?
yeah, I know, and I still have that rolling around in my head, like, hey, we're gonna kill the bean crop 3 times. Like that's what it does. Man, we haven't killed it.
Yep. Haven't killed it. So anyway, no, that's all I have, guys.
Well, you did, and it came back stronger.
Yeah, exactly. Cool.
All right. Well, Kevin, really appreciate you jumping on with us today. And all right, we'll be at the end of the day. What I heard you say was have a plan for the next time it moves up or down, and then take that action.
That's correct.
All right.
It's great chatting with you guys, man.
Yeah.
Good talking to you too, man. Have a great week. My kids are going to enjoy being in school for another week. And, lettuce is the future.
So there we go.
All right.
All right. Thanks, guys.
Yeah.
Bye.
All right. See you. Thanks.